Hey guys, what's up? Alec back with the daily stock market, and look at that, a fairly flat day in the markets overall. However, we had some individual stocks like Tesla down 4.4%, leading the pack on the big tech stock watch list. Now, we do have our big tech stock watch list pulled up today, so we're going to be talking about all the best big tech stocks. In this video, we have to do an update on Tesla, Microsoft, Amazon, Google, Apple, Facebook, Nvidia. We even had Alibaba up 5% on Friday, now at $88 per share. So let me know in the comments below if this is a stock you guys want me to talk about, Alibaba, in a future video. But in this video, we're going to do all the familiar favorites like Google, Amazon, Microsoft, and many more. So make sure you stay throughout the entire video. Just make sure you drop a big thumbs up on this video, you're subscribed on YouTube, and you share this video with a friend. Other than that, let's dive right into it. So first up, let's talk about what's been going on with Tesla stock at $244 per share. Anytime they're under $250 per share, it could be a good time to dollar cost average in. Now remember, in the last week, they're down 10%, and they were as high as $275 per share earlier in September. Okay, well, mid-September, I should say. Now, if we pull out to the year to date, remember, Tesla is a stock that is up 106% on the year. So they could still level out, and there's still a probability of them going under 225 and closer to $200 per share. So that's the price point I want to buy a little bit heavier at. And remember, earlier this year, they got knocked all the way down in January 5th, and beginning of January, late December, to $120 per share. So wouldn't that have been a good time to be buying Tesla up 155%? Now, those opportunities probably won't come again, but closer to that $200 per share could definitely come again. Now, the PE ratio is 69. Keep in mind, the 52-week high is basically $300 per share. We have a market cap of $700 billion. Remember, Tesla's not even a $1 trillion company yet, and the thing is, they definitely will be in the future. Any way you want to slice the cake, Tesla is a leader in electric vehicles. They're a leader in electric charging. Ford and GM and other legacy automakers are all coming to Tesla right now to use their supercharger. They also have an AI division with, the automatic driving cars that can basically become driverless Ubers. And they also have a huge expansion with the robots and the AIs and the robots that are going to be working in factories. They also could be competing with Nvidia soon because they use a lot of Nvidia chips. So there's a good chance that Tesla is going to make their own division for semiconductor and semiconductor chips. They could also look into manufacturing lithium, which is a huge sector in itself. And once they expand to China and India and more of Europe, the sky is the limit for Tesla, and it could definitely be one of the biggest companies in the world. So to be buying under a $1 trillion market cap, anytime you see Tesla under a $1 trillion market cap, in my personal opinion, it's a good thing to be dollar cost averaging in under $1 trillion market cap. Now, I want to go over this headline real quick because it is very interesting. Cathie Woods offloads a whopping $47 million of Tesla stock last week and doubles down on this AI stock, which is Palantir. Okay, if you scroll down, we can kind of see the details of the transaction. Go ahead and pause the video and read through some of this if you want. But we can see that the Palantir stake was boosted, which has bet ARK, which has bet on disruptive innovation, increased their Palantir technology holdings in the week ending September 22nd. Wood and her firm are big believers in artificial intelligence and disruptive potential and have been high on companies that are attractively valued based on their AI potential. Okay, so this is really what she sees is a huge AI potential. She's riding that wave right now. In my personal opinion, I don't really support this decision. Overall, I think that Tesla has way more potential when it comes to AI than something like Palantir Technologies does. And if we look at what analysts have to say about Tesla, they are extremely split, with a $400 price target as the highest potential upside target in the next 12 months. But on average, we have analysts with an 11% upside in the next 12 months to around $273 per share. Some analysts have them as low as $120 for the risk on Tesla. So this is a very wide spectrum, as you can see, so take it with a grain of salt. Tesla's also a very unpredictable stock, so it's extremely hard to predict where Tesla's price will be in the next 12 months. Here you can see where some of these analysts are coming from. Some of the 5-star analysts have closer to a $300 to $75 price target. You can see some of the 1-star analysts are the ones with the $125 price target. However, we do see a 4.5-star analyst with a $150 price target. So it'd be interesting to read a little bit about Tony Sacconaghi and see what his bearish takes are on Tesla, and if it's just something like, oh, the PE ratio is too high and they're already at their ceiling, then in my opinion those bearish takes don't hold too much weight. Okay, the next stock that we haven't talked about in a while is Amazon, ticker symbol AMZN. They are down 7.7% in the past week, so it could be a small buying opportunity right now. However, in the last year to date, actually, they're up 51%. Remember, this stock was closer to $95 per share earlier this year. And in the last year, they're up only 11%. When you look at a 5-year chart, this is when Amazon stock really starts to get interesting because it's only up around 35% in the past 5 years. And there's been a lot more growth than that on the balance sheet, the net income, the revenue growth, and everything has been significantly higher than 35% over the last 5 years. So in my opinion, it is a good time to be dollar cost averaging in for long-term investors. Okay, in 2019, we saw it closer to $100 per share. Right now, it's closer to $130, but there's still an opportunity to get in under $100 per share again. So what I would do, set your price alerts at $100, $102, $105 per share, and be alerted next time Amazon falls that low, so you're not sitting on your hands and you have some capital on the sidelines ready to inject into Amazon stock at $105, $102, even $100 per share, because there's still some probability that there's still an actual possible chance that we could see Amazon trading at $100 per share again, at least one more time before it's just up and away for the next 10, 20 years. Big tech stocks are some of my favorite in the entire stock market. However, they do trade at a premium because look at that price to earnings ratio, closer to 102 with a market cap of 1.3 trillion. So, something like Amazon has over $500 billion of market cap on something like Tesla. But in my opinion, I think eventually Tesla can surpass the market cap of Amazon, and I think Amazon could eventually surpass the market cap of $2 trillion. Now let's look at what analysts have to say about a stock like Amazon, and you can see the significant difference on what analysts have to say about a stock like Amazon compared to a stock like Tesla. There's not much risk. We have Amazon currently sitting at $129 per share, and the biggest risk in analysts' eyes is $140 per share in the next 12 months. So you basically have a guaranteed upside in analysts' eyes on Amazon stock. Okay, on average, which is the white line at 176.18 cents, okay, that's just a 36% upside on average over the next 12 months that analysts are predicting, with some analysts have price targets as high as $230 per share, which is that green line, the top line there. As we scroll down, you can see where these analysts are coming from. This one is a lot more relevant than something like Tesla stock, because analysts can't really agree on Tesla stock. They never really have. You can also see that it's not really reiterated as much as something like Amazon stock is, meaning that a lot more analysts are tracking a stock like Amazon. And we can also see a lot more 5-star and 4-star analysts coming from well-respected places like Bank of America Securities, Morgan Stanley, and Citibank as well, with good price targets on something like Amazon. So therefore, in my opinion, analysts hold a little bit more weight on a stock like Amazon than they do on a stock, on their opinion on a stock like Tesla. So you could expect, a 30%, 20 to 30% upside on Amazon stock in the next 12 months. That's in my personal opinion. And as far as one of my favorite stocks in the stock market, we have a ticker symbol GOOGL or ticker symbol GOOG. It's the same exact stock. Either ticker symbol is going to get you to Alphabet, and that's the parent company of Google. And if we look at the last past week, they're down 4.98%. So it could be a little bit of a buying opportunity, not as much as Tesla and Amazon, but it's still presented a little bit there. Year to date, they are up 45%, so not as much of a huge streak as something like Tesla. But in the last year, they're up 30%. And then in the last 5 years, they're up 125%. So they've consistently been getting around 30% returns year over year for the last 5 years consistently on average. Okay, now if you bought in a little closer to the end of 2022, beginning of 2023, when I was buying really heavy, you got in at under $100 per share. And that's the best place to be buying Alphabet. However, I think it's never a bad time to dollar cost average into something like Google stock. They have a monopoly on advertising, digital advertising at the end of the day. The only real competitor is Facebook or Meta, but their advertising is around 25 to 50% of digital ad spend on Google and YouTube, the two powerhouses, okay? So I think those will continue to be relevant. This is also the lowest PE on the big tech stocks. We have a PE ratio of 27.55. So if you're a value investor and you're watching this, you could probably even add this Google to your watch list, and I'm sure it will trigger under 22 PE ratio eventually. Okay, so if you can get under 22, 23 PE ratio, that's a steal on Google. Now, we do have a market cap of 1.7 trillion. So that's around $1 trillion larger, more than twice as big as something like Tesla. Okay, so Tesla is more high risk, high reward. Google is more of like a safe bet. So in my opinion, I think that Tesla will eventually outpace the market cap of Google one day. They definitely could, but that could be 10 years from now, 15 years from now. It could take them a long time to develop some of the technology that they want to succeed in. I also think that Google has a huge place in AI technology. Look at ChatGPT, for example. That's Google's biggest threat right now because it could potentially take out all of search. It could extinct google.com, and people could go to ChatGPT when they want to find out any information online. They would just ask a chatbot. So Google is highly inclined to be very successful in AI over the next few years and developing new AIs. So don't be shocked and surprised if Google in the next 1, 2, 3, 4, 5 years starts putting out some crazy AI tech. Okay, so keep an eye on that. So something to definitely consider and think about when you're investing in Google, and something to even do a deep dive in why AI technology and developing AI and defeating ChatGPT is so important for something like Google stock. They have significant cash flow, awesome balance sheet, great net income, positive earning company, obviously. Revenues growing every single year. They topped out at around $150 per share. So the stock is a little bit high right now, but dollar cost averaging could solve that issue, and also setting price alerts around $100, $105 per share to notify you to buy larger amounts at that time. Now, if we see what analysts have to say about Google stock at $130 per share, right now the risks analysts have is $121 per share, the biggest downside of the next 12 months. On average, they have a 15.68% upside to around $150 per share over the next 12 months. And I pretty much agree with that price point. So if you're able to get in under $130 per share, even under $120 per share, that's going to give you a lot better percentage upside than 15%. Keep in mind, so that's why it's important to dollar cost average in and also buy bigger lump sums when you price alerts go off that you set. Okay, now the highest analysts have is $200 per share in the next 12 months, and we can see where some of these analysts are from. Bank of America, Barclays, both 5-star analysts, $200 price target, $146 price target. A JPM analyst, $150 price target. So it seems like, around $150 is where analysts agree. I agree with them for that price target for the next 12 months also. So thank you guys so much for tuning in to another episode of the Daily Stock Market. Thank you for sharing with your friends, liking, and subscribing. If you want to follow along with the exact trades that I'm putting out, when I'm buying, when I'm selling, how much I'm taking of each stock. If you're an option trader, we do lots of option trades. You can see the strike price and the expiration dates I'm getting on. Join our community. You could join our group chat and talk with hundreds of other members that have had amazing success with the group. Click on success number 9 here on my portfolio on the Daily Stock Market on Instagram. Now 214,000 followers, 828 posts. Click on success number 9. Read through some of those positive testimonials and just DM me. I'll send you over an application so that way you can, I can help you out the best way possible and learn a little bit about you. And then I'll shoot you over my website so you can see everything for yourself, what you're going to be learning. And if it makes sense to you and if it's inside your budget, then let's make some money in the stock market together. It's that simple. Thank you guys for tuning in. As always, thank you for all the love on every single video. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.